It's great to have your company for the weekly this Friday, the 17th day of September. My name's Jessica Amir, a senior market analyst with Bell Direct. But the oil price hit a 7-week high, supporting the market, but we're still on September shaky ground, and uranium stocks are cast into the spotlight as Australia is set to build nuclear-powered submarines. But now let's go to the markets. Well, we saw the Aussie share market bounce off its 8-week low early in the week, but on Friday, the market fell back to the same place, weighed by iron ore stocks falling. However, across the week, there were pockets of green. Energy stocks charged. Woodside Petroleum, WPL, their shares up 9%. Beach Energy, BPT, followed. Now, it comes as the oil price jumped 5%, rising to its highest level since August. Why? Well, US oil stockpiles were drawn down ahead of demand picking up because vaccination rollouts are increasing. Also supporting markets, property stocks, which rose to their highest level since February last year. Centre Group, SCG, and Mirvac, MGR, both rose 4%. Just as two examples, after Australia reached a 70% first dose vaccination milestone, implying that most Aussies will be fully vaxxed by around the 28th of October. Consensus or market expectations are also supporting that Aussies will be heading back to shopping centres and CBDs, and earnings per share growth of almost 10% is expected for real estate investment trusts or REITs in 2022. All in all though, despite the market bouncing lower toward the end of this week, the market is 3% away from its all-time high and bracing for further September quarter-end volatility. Adding a layer of caution, China's biggest property developer is going broke. They can't pay their monthly interest payments. So this could have a flow-on effect to other property developers. And given the property industry is a huge consumer of steel and iron ore is a key ingredient, you'd expect iron ore demand to fall again. We know the Aussie share market has already been affected by China reducing steel production, and the ASX is down 1.8% this month, with iron ore stocks really dragging the chain. This chart reinforces the point. Further volatility may be ahead. The MACD, which is the technical indicator toward the bottom, shows the market fell below a key reference line. The last time this occurred was in March, and then we saw the market tread water for several weeks. The takeaway here, expect further bumps ahead, perhaps buying opportunities, but keep in mind the market does historically rally 0.9% on average in October, making it the fourth best month for equities. Look in the big movers in the ASX 200 this week. Lithium and tech surged Monday to Thursday. Firstly, in the lithium sector, Pilbara Minerals, PLS, their shares shot up 14%, rising to an all-time high after they sold lithium, spodumene concentrate, at a record price from their WA Port Hedland facility. But this announcement is not just about Pilbara Minerals. PLS auctioned lithium equivalent at $2,500 a US tonne. That's over double recent price indicators, simply highlighting that there's a tight lithium market and heightened demand from battery makers. Secondly, looking at other big movers this week amid the computer chip shortage, circuit board maker Altium ALU thrust into the spotlight, their shares up 13% on no news. Why? Well, there's reports that some car electric makers are now having to cut back on production because they can't source enough chips. So the chip shortage is endemic and getting worse. Altium, their shares were sold off in late August after releasing their financial results, but since then, many investors took that dip as a buying opportunity, particularly liking the fact that ALU expects revenue growth of 20% in 2022. An investment bank, Citi, also upgraded ALU as a buy. As to what to watch next week and ahead, firstly, a huge focus will be on uranium stocks. Why? Well, Australia, the US and the UK formed an alliance. The first step in the trilogy will be Australia building a fleet of nuclear-powered submarines in Australia in Adelaide. Plans will be mapped out over the next 18 months, with Australia taking nuclear stewardship responsibilities, meaning Australia and this trilogy will likely favour Aussie companies. So why build nuclear subs here? Well, firstly, Australia has the largest uranium reserves in the world, and South Australia is rich in uranium with just a handful of producers, and that's according to the World Nuclear Association. So there's firstly the Olympic Dam project, the world's largest deposit of uranium that's run by BHP. Secondly, there's the Ranger and Jabiluka projects. They're operated by a company called Energy Resource Australia, ERA. And ERA is one of the longest operating uranium producers and is majority or 86% owned by Rio Tinto. Thirdly, there's an idle project called Honeymoon, which is under care and maintenance, and that's run by a company called Boss Energy, BOE. They've got a fully permitted uranium mine, native title agreements and operational permits, and they say that they can reopen and produce uranium within 12 months. So keep that in mind. Fourthly and lastly, in South Australia as well, there's the 4 Mile project operated by Alliance Resources, AGS, who have a 10-year mineral lease. Secondly, as for what else to watch next week, it's always useful to look at the most traded stocks at Bell Direct to see where others are finding value for potential trading ideas. This week, some of the most buys were in travel and tourism stocks such as Flight Centre, FLT, Sydney Airport, SYD. Both stocks rose for 4 straight weeks, given international flights are tipped to take off in December. And there was a lot of Bell Direct clients buying into the lithium sector too. WA and Canadian lithium miner Sayona Mining, SYA, saw increased buying and its stock rose 16%, while Pilbara Minerals, PLS, saw a lot of buying too after their record spodumene lithium sale this week. And finally, as for what else to watch next week, there's plenty of economic news to be across. The RBA minutes will be released on Tuesday, and a services sector update is due on Thursday. It's called the Flash PMI. Remember, readings above 50 indicate the sector is growing. Below 50 shows a decline. And given the restrictions in place, we're not expecting to see a recovery until November. And that's the weekly. Don't forget to follow us on Twitter for breaking news that you need to be across. Or if you've got any questions or comments, please leave them on YouTube. From all of us here at Bell Direct, have a happy and safe weekend. Bye for now.